Our focus today will be on in-depth understanding of the market direction. From the higher time frame, we scale down to the lower time frame. We identify areas of interest for us to take our trades. So first thing you want to do is you want to go from the 12-month time frame. You want to see what the 12-month time frame looks like. Because the 12-month time frame, even if the lower time frames are bullish or bearish, the 12-month time frame will easily point towards the long-term direction. It makes it a lot easy for you. Looking at this on the 12-month time frame, you can easily say that this is actually long-term bullish. Because look at this, printed a very big up close candle. And after that, everything here has been a consolidation. All the price actions that we've been seeing since 2022 on this asset class has been an absolute consolidation. So what is that telling you right now? That is telling you that after this consolidation manipulation, the next thing we're going to see is an expansion that will take this to the upside. That is the next thing we want to see, an expansion that will take this to the upside. And this strategy I'm giving you guys right now is something that you can easily use for trading and investment purposes. Because this asset class right here, I don't just trade it, I invest in it as well. So you're literally using the strategy not just to trade, you're using it to invest. So if you want to make an investment on any asset class, whether it's stocks, commodities, cryptos, forex, whatever it is, as long as it has a chart, it's the same concept. So right now you can already see long term, this is impulsively very bullish. We've had few years of retracement. So that means we're still going to have a few years of expansion to rally to the upside. Look at the numbers up here, but let's not get into that. So now this is how you can identify your long-term direction. And we're going to do this example on different asset classes as well. And then we'll go down into identify points of interest. So let's have a look at a different asset class. Let's have a look, for example, let's have a look at Bitcoin, for instance. So this is Bitcoin, and I'll remove everything on the screen. Now on Bitcoin, you can already see Bitcoin as well. This is long-term bullish. Now, when you're choosing a pair, I need you all to remember this, right? Because it's going to be very important, and this is what will literally decide whether you will be a profitable trader or not. Because a lot of people think you being a profitable trader is all about your skills. It's not just your skills. It also depends on the pairs you trade. That is very important. The pairs you trade can leave you unprofitable. No matter how much you try, the pairs you trade can make you just be an unprofitable trader. So always remember that when you want to choose a pair you want to trade, you want a pair that is significantly trending to one direction. You're seeing that this pair, it's very obvious. Like if I woke you up from sleep right now and asked you, can you look at this chart and tell me if it's bullish or bearish? You want to instantly give me an answer. You don't want to be trading a pair that it's taking you 2 hours, 3 hours to figure out the long-term direction. If it's taking you that long, you shouldn't be trading that pair. Guess what happens? Because the moment you start trading it and you take a loss, multiple losses, you lose confidence in yourself, confidence in your abilities, and next thing you're blowing your accounts. But when you're trading with clarity and understanding that this pair is bearish, long term is bearish, this is your point of interest. All you're doing is waiting for a break of structure on your time frame. Once you see it, you take a trade. If it's a losing trade, that's fine. You wait on the sidelines for another break of structure. You see it, you take the same trade again, and you'll be surprised. Price will deliver towards your direction, and you'll make money. It will cover the losses. I've had trades where I took my first entry, second entry, both losses. It didn't stop me from taking the third one. It broke structure the third time. I took the trade again. And guess what? The third one worked. And what I made from that third one covered what I lost from the last two plus profits. So now looking at this right here, you can basically see long term, this is bullish. So 12-month long term is bullish. You can now start to scale down to 6-month time frame. And on 6-month time frame, you can also see as well, this is bullish, consistently creating higher highs and higher lows right here. This is your higher high, your higher low, another higher high, another higher low, another higher high, another higher low, and then we'll have another higher high. So even if anything brings price to the downside, for whatever reason, if price should come to the downside, it is still an opportunity for you to buy it again. So that means all you're looking for on the long-term perspective is areas of interest to buy it again. You can do the same exact thing again on the 3-month time frame, and you can see what that looks like. Now let's take this to the monthly. I'll remove everything here, take this to the monthly. And you can also see on the monthly time frame. So this is our current monthly range. From this monthly range low, you can also see how price is consistently creating higher highs, higher lows, a higher high, a higher low, and this higher high. So on the monthly range, this is still bullish. The only time we're going to say that this monthly range is bearish is if price should break below this low. If it breaks and closes below this low, that is the only time we can say, okay, this is short-term bearish. So what we do is to look for areas of interest that price wants to come down into before a continuation to the upside. That is the only thing we're looking for. Now you can take this on you can take it to the weekly as well. On the weekly time frame, you can see that on the weekly time frame, this is bearish on the weekly. I'll show you why I said this is bearish. Right here, this is a low, this is a high. I'll remove this line so it doesn't confuse you. And I'll make this line red so you can be able to differentiate what I'm talking about. Now, right here, this created a higher low, created a higher high, created a higher low. And right here, it didn't create a higher high. Why did it not create a higher high? This was a run on liquidity. There wasn't a candle closure. If this candle had closed above this one, I would have said it's a break of structure, but it didn't close. So this right here is the run on liquidity. And after that, it dropped to the downside and it broke structure below this level. Now, as much as I'm still long-term bullish on Bitcoin, this is the only thing, this is the only area where I will be trading with caution. While price is down here, my only interest is to buy. Once price is up here within this range low and this range high, what I'm going to do is if I'm looking for a buy inside this range, I'm going to be needing to see extra confirmations. I'll teach you all about extra confirmations, multiple confirmations, but I'm not going to get too much in depth with that so I don't confuse you. But for now, within this time frame where we are right now, my goal is simply to look for buys, to continue to buy this until we are in here. That is the only area I will take extreme caution. Why? Because this weekly market structure broke to the downside. So price can still come up here. I'm not saying this will happen, but it can still come up here and then break structure and continue lower because this weekly is bearish. The only reason why I am not anticipating for this to happen is simply because my monthly is still bullish and we're still within this monthly higher low, higher high. So the monthly is bullish, but the weekly is bearish. But that doesn't mean I'm just going to fold my hands and just wait on the sidelines. I'm still going to be taking trades, buys, most especially once I see the lower time frames aligning with the higher time frame. I'll show you what I mean by the lower time frames aligning with the higher time frames. Now, if we take this to the 4-hour time frame, remember the weekly is bearish. Let's go to the daily. The daily is bearish. You can write that down on your charts when you're doing analysis. You can write that somewhere and say weekly and daily are bearish. 12 months, 3 months, monthly, bullish. Now you can see how conflicting this can be for a new trader. You're seeing that weekly and daily are bearish. 12 months, 3 months, 6 months, monthly, bullish. That creates a lot of confusion. You're now wondering, should I be buying? Should I be selling? All you need to do is to identify an area of interest on the higher time frame. Wait for price to come there and show you this long-term trend continuation. Once you see this long-term trend, this 12-month, 3 months, 6 months, monthly continuation, you see price on the lower time frame, on the 4-hour time frame, on the 1-hour time frame, going bullish, you start looking for buys. I'll show you what I mean by that. Now, in this case, we have a weekly imbalance. Now, I'll explain in using an imbalance as point of interest in much detail. But here in this case, you have this imbalance. And this imbalance right here, this is your point of interest where you want to look for a trade. Now, once price comes down in here, all you're looking for is for your lower time frames to now be trending bullish. Once you start seeing that, you start looking for buys. Let's go to 1 hour time frame. Right here, you can see that before price came into that position, it was trending to the downside, creating lower highs and lower lows consistently. Lower high, lower low, lower high, lower low. Rallied up, took liquidity, created a lower high, a lower low, a lower high, lower low, lower high, a lower low. So all you're waiting for is for price to create a higher high. Then you start looking for buys. And right here, this is a rally to the upside, and you can see how price rallied and it created a higher high. The moment you're seeing this higher high created, you're looking for an entry from here. Price coming down here for a retest, you're looking for an entry, and you can use this low as your stop loss. We'll go in depth on entries and exits, but today we're just focusing on direction, how you can understand where the market is going. So that's our focus today. Now, the moment you're seeing this break of structure on the 1 hour time frame, now you can say that your 1 hour time frame has aligned with your higher time frame, which is the 12 months, 6 months, 3 months, and the monthly. You can now say that this time frame, 1 hour, has aligned with the higher time frame, which is the long-term market direction. The higher time frame is showing you the long-term market direction, which is bullish. So once you're seeing on the lower time frame, price has tapped a point of interest and it's now reacting and going towards the trend. You focus on buys. Buy, buy, buy. That is all you want to do. Every single week, you open your chart, you look for a point of interest on the higher time frame, whether it's 4 hour, daily, weekly, monthly. Wait for price to tap it, break structure, and you buy it again. Period. Nothing else. This is literally going to take you 15, 20 minutes every week to do this analysis. Once you've identified the trend, you've seen the break of structure to align that we are now bullish on the lower time frame. All you're doing is going to 4 hour daily, looking for area of interest, which is a fair value gap, mark it out, wait in there, price will come in, break structure, you buy again. Now,